Hey guys, welcome to the technical analysis video by Aggregated Finance. As always, the contents of this video do not constitute financial or investment advice, and any trading you do based on this video is done entirely at your own risk. Alright guys, with that, let's get into it. Let's take a look at the, firstly, let's start off slightly differently today. We're looking at the chart of the S&P 500. This is the SPY. We can see last week on Friday we got a big red down day, and the day before that on Thursday was also a down day. At the moment it's early in the morning, US East Coast. The US equity markets will be opening in around an hour and a half or so, and already price is gapping down. So we've had a bit of a bloodbath in the equity markets the last 2 or 3 days. Now let's go back to our cryptos, where we normally spend most of our time. Let's take a look at Bitcoin at the moment. So the last 2 or 3 days, you can see the equity markets have dragged price down, but interestingly, although we intraday moved below the low of the candle from the 18th, this candle will still be open for quite a few more hours, and as yet we have not closed below it. Now I put a long trade on last week on Wednesday, I believe it was, saying that the cryptos should be going high. We got what I call this flush and blast off play. Price did, after we got that candle close, did for the next 2 or 3 days move higher. However, with the equity markets turning lower, this has dragged price down somewhat. Now, based off the back of my video last week with that long trade alert, within the group somebody did message me and ask me, they said, where would the stop be? And the stop really would be any daily close, any daily candle close below this low. So although we've gone below the low of the 18th, candle has not as yet closed. So technically, the stop has not triggered. Having said that, providing you use sensible position size and you didn't overload your boat or anything like that, some of you may have wanted to stop out, but then that's why it's so important to use correct position size. Whenever you enter a trade, you should always know where your stop out is and abide by it. And if the stop does trigger, it should not sink you deep underwater. Everything needs to be done in the right proportion so that you never really expose yourself to undue risk unnecessarily, because trades can and do fail. Let's take a look at Ethereum. It'll be a very similar case there. So interestingly, yes, based on the long alert last week that we put out to members, the price did start to gradually move higher, and then on the 21st, when the equity markets started turning lower, this did drag it down. So again, although we are quite a way below the low of the 18th, the candle has not yet closed. Again, depending on your position size, you may have chosen to stop out there, those of you that did decide to follow the trade. Looking forward, where do we go from here? The longer we linger below the 50 MA, that's the yellow line, which at the moment is rising. The longer price remains below, the 50 MA will start to turn lower, and that will tend to push price lower. So that would portend lower prices. We have to see what happens here. I mean, going back to the S&P 500, the fact that we've got these big red down days, and it looks like we're gapping low when the market opens this morning. The fact that price overall has not given us big red bars and gone significantly lower, that oddly enough is showing signs of strength. So if there's any bounce in the equity markets, don't be surprised if we move higher on the cryptos. So, and it just seems, it reinforces the view that the fact that we've come down in price is due to the equity markets, you know, those big red bars just dragging cryptos lower. So it's getting caught up in the bloodbath. Otherwise, I would have thought cryptos would have started or continued to move higher. Right, moving on to the weekly chart of Ethereum. This is continuing to look bearish, so again, putting that on the same page as the remaining below the 50 MA on the daily chart. If we remain below the moving averages here, the longer we linger here, the more bearish that will be, and that would tend to push prices somewhat lower. So it looks like, you know, 2 weeks ago we closed below the moving averages. On last week we remained below, and we've just opened this week's candle now, and we are remaining below. So it could be setting up for further significant downside in Ethereum. Let's look at Bitcoin. Take a look at that. We probably have a very, very similar picture. There we go. It's exactly the same formation. We are stuck below these moving averages. So it's looking like downside is in play. We may get a bounce. Let's look back at the daily chart. We're still quite away from the 50 MA, and as long as we remain below, price will build pressure to go to the downside. However, just bear in mind we may get a bounce at this point here, but we are range bound, but the bias is to the downside. So just to reiterate, just to avoid any ambiguity, the equity markets have gone a lot lower. Let's take a quick look at the S&P chart, and they are gapping lower today. However, the cryptos have not actually followed through. They've not quite followed the equity markets with the same magnitude, which tells me in the short run, if we get a bounce in the main equity markets, the cryptos could move higher, perhaps up towards this area here. So in the short term, there may well be a bounce coming, although I don't think it'll be that big of a bounce. But going back to the weekly chart, we are building bearish pressure here. So notwithstanding any bounce in the short term, it looks like the cryptos are setting up for longer term downside. Okay, so I hope that avoids any ambiguity, guys. I want to wish you success with your crypto trading, and we'll catch up with you guys again soon in the next video in a couple of days' time.